Friday, the 25th of September. This is Frontier Opening Bell. I am Bosin Amafai, and of course, it's a Friday, so I'm all excited about the trading week so far on the Nigerian market after Tuesday's interest rate cut on the equity side. It's been a very roaring back, and we hope today will remain in that trajectory. Onyeka Ijoma, who is the head of industrial goods analysis at Betiva Capital Management. Onyeka, good morning. Welcome.
Good morning, Wilson. It's a pleasure to be here.
Thank you so much. Your sector is where Julius Berger, moving road, bridges, and rails, whatever in Nigeria, now wants to diversify into agriculture, agro-processing. That's one big news I've been trying to wrap my head around since yesterday. When you see a behemoth like Julius Berger, 50 years of road construction in Nigeria, moving into the agriculture sector, then I better get ready to join them in that space. It looks like they're going to use bulldozers and all of that to move really big. Okay, so Agnes, good morning. Agnes is the partner at GBS Africa and head of international relations, and a partner also at Frontier Africa Reports. Good morning, Agnes.
Good morning, boss, and I'll join you in the agriculture sector. I think people are realizing we got to chop, no? People got chop. So.
People must chop. People must whack. If we want to use another Nigerian English, people must whack. Man must whack. That's how it goes. Man must whack.
Okay.
So that's how it goes in a pidgin. Isn't it, Ayodijebo?
Yeah, good morning. Yes, we must always, like someone put it, even in time of war, you need to face the war. So there will always be demand.
Yeah, there's always a good demand. Thank you, every one of you. Good morning. Let's check in with the market very quickly. And then Nigerian market, 0.7%, nearly 0.8. That's a very roaring one. If this continues today, we'll see the index at 26,000. The Ivorian market softened 0.27%. The Egyptian stock market down to 0.62%. Kenya finished flat, just less than 0.1%. That's green, by the way. But the South African bourse was the strongest, 1.84%, despite the softening in the currency, the rand. Look at East Africa and the authorities in Kenya's the Nairobi Securities Exchange is extending Kenya Airways suspension by another 6 months. No one knows when the troubles for these Pride of Africa airline will be over. Equity Group Holdings, which is the parent company for Equity Bank, one of the largest bank in Kenya, investors moved nearly 30 million of the company's shares yesterday. A very great day there for that banking giant. And the Kenya Securities and Exchange Commission, the CMA, that's the Capital Market Authority, admitted forefront management to its regulatory sandbox. And the red flag has been raised by the authorities in Kenya over citing investment on paid claims, 122.8 million shillings. There's a warning that investors could lose their money if they're not careful in this particular fund manager. Agnes, Kenya Airways, I'm sure you flew your country's flag a number of times. So I have done so once or twice over the last many years. And I was very pleasantly pleased to see Kenya Airways stand near KLM in New York Airport, at Washington Airport as well. So I'm a little bit uncomfortable with the way things are going for Kenya Airways.
Thank you, Boston. Kenya Airways has struggled. It's been about 2 years where they have continued to operate negatively, and this is obviously contributed to the influx of Gulf airlines into African markets. It's not the only airline that is struggling. You know, the South African airlines, the Ugandan airlines. I mean, it is just a market that has just really been challenged even before the challenges that were induced by COVID-19. So the airline, obviously, the government is the bill in Parliament for the government to take over. It currently owns about 48% of the share, with KLM owning about 4 to 6%. So there's been that conversation that it has to be nationalized. Obviously, there are people who think no, it should be allowed to lose, and a country doesn't need to have a national airline. It's a very competitive market, and I'm curious to see what this nationalization will bring, whether the airline will operate at a profit or not. But it is quite challenging for the airline, coupled with bad investment project, bad management. Look, they hired a CEO from Poland who obviously was running an airline that was very poorly managed. Just because he was European, he was given the role. The company continued to decline, and they were hoping that this CEO would probably lift the airline, but suddenly not. So we wait until another 6 months extension of their suspension, hoping that the bill in Parliament will fall through, and that the government, I think government should stick to doing government business and leave private sector to run profitable business. But I wait and see, Boston.
This is a very tenuous conversation about even when Nigeria is looking at whether the government should get back into aviation, airline business. How you did, Jebo, isn't it?
Yes, I think I quite agree with Agnes. If you look at our own even sector, airline sector, taxes has been what has been the major drawback. So government should focus more on is to see how they want to create the enabling environment. AMCON took over ARIC, Aero Contractors, and you can even still see they are still struggling. They've not stabilized up to now. So governments getting involved in businesses that can be run profitably, I feel it's another form of creating some form of leakages, and it's also inefficient. So I think focus should be more on creating that enabling environment. They need to review that high cost and do an assessment of why most of, even for airpeace, they are also still struggling. So we've not really seen that very successful story that's for Nigeria, that airline that has been able to live over time, and we can all study it as a major, that poster child that's for others to follow.
Thank you. Let's fly out of that and talk about the Nigerian market. Again, the biggest story for me on the market yesterday was the construction giant Julius Berger say the board has approved diversification into agro processing. That hits me between the eyes, as it were. If there is any company that's going to diversify after operating in Nigeria for 50 years in road, bridges, whatever, construction, I don't think that would be Julius Berger. But here we go. Budget also released yesterday, the states of the state government's fiscal sustainability, 140-page report giving a ranking as to the level of sustainability. It's an interesting report. It was the executive summary laid out a very unpleasant road to the current fiscal unsustainability of dozens of Nigeria's state governments. Meantime, Ghana Authority has put 3.5 billion shillings on the table for depositors of closed banks. They are to step forward to redeem their promissory notes or bonds at face value and get full cash for their deposits that have gone down in those closed commercial banks. Angola is in the throes of FX, so is asking mortgage holders in foreign currency to convert them to local currency, which was the kwanzas. I'll let you shoot this straight, Onyeka, because this is your area as far as Julius Berger is concerned. So building roads for me to drive on, now producing food for me to eat by the same company.
Yes, this is actually not surprising, even though it seems like it's a huge shift. Julius Berger has had cash flow problems over the past 5, 6, 7 years. We know that most of their revenue comes from the federal government, and the Nigerian federal government unfortunately has a history of delaying payments to local and international contractors, and this puts significant pressure on their EBIT, as they've had to take out short-term financing options to fund their working capital shortfalls. At the same time, they've experienced a significant downsizing of their operations. They experienced a significant downsizing of the operation between 2014 and 2018. And this was due to a drop in capex, spending that was being thrown their way, as we began to see a lot of competition from the Chinese construction companies, whether it was the CCCC or the Chinese Railway Construction Company, or the different construction companies that have come from China. And so they have been looking for ways to diversify their earnings base, so that they would not be hit with these shocks anymore, and also to improve their cash flow problem. In 2017, we recall that they announced a venture with Petrolon Energy to explore oil and gas opportunities. At the moment, the oil and gas space is not the most attractive, and so we are seeing them look towards agro-processing. Now, I believe that we can all agree that in Nigeria, given the body language of the government, agro-processing seems to be, the agricultural value chain seems to be one of the best investment opportunities for an investor in this space, because not only is it receiving a lot of support from the government, there's a lot of opportunity in that space, given our huge food shortage in Nigeria. So it does make sense for them to do that. We're waiting for more. We're waiting for more information from management, and then we'll see how it goes. But then, going into the debt sustainability, fiscal sustainability for states that you talked about, budgets released a very terrifying outlook for Nigerian states. It was pretty much a horror story in written form, and from here we see that of 36 states, very few are fiscally sustainable. Very few are able to meet, in 2019, were able to meet their recurrent expenditure and loan repayment obligations. And even of those that were able to meet their recurrent expenditure and loan repayment obligations, very few had significant surplus to invest in capital expenditure. And it becomes even more troubling when you see that it is some of the biggest states that fall into this bracket. Lagos, for example, had one of the worst deficits. Their worst revenue deficits when compared to their recurrent expenditure and debt service obligations. And we begin to see that Lagos is, if not carefully managed, they might approach a debt crisis, because they will need to borrow to continue to fund recurrent expenditure and not even capital expenditure. And then looking at that table, one thing remains clear, that all revenue remains the major source of revenue in Nigeria, because of all the states that we see having strong fiscal sustainability. When I say strong fiscal sustainability, decent fiscal sustainability, because even Rivers State there still has some issues of its own. Almost all of them, receive derivation revenue from crude sales, and almost all of them are all producing states, and begin to it paints a
I agree
a
with you.
picture in Nigeria.
I agree with you. Even Lagos State, as everyone may try to, you look at the debt that Lagos is sitting on. If you look at Rivers State, the volume of monthly federal allocation, when we say is that sustainable, now that the federal government itself is groaning and its own fiscal imbalance, even from oil, is there across board, including Lagos State, which is used as a poster boy, is not beginning to look very sustainable moving forward. Ayodeji, give us a minute of your thoughts on this fiscal sustainability report.
Yes, it's well detailed and further buttresses the challenges we're going through at the state level, because most times the focus has always been on the federal government. Mm-hmm. But if we drill down, we look at the states, because we hardly find any reports that puts together, when we talk about the budget, it's not only the federal government 10 trillion naira budget. By the time we'll find a report that can put together the budget for the 36 states, will give us a better picture of how we're doing as an economy. And what this report as stated is that you can see that for most of the states, continued reliance on FAC allocation. That model has to change. Most states will not look inwards to see how they can grow their high GR as long as that FAC allocation is on the table. You go to Abuja and you get your allocation. As long as that is on. Yes, you. So I think it's a high time we look there, and most of those states look inwards and see what they are best doing. I like I think that was about 2 or 3 years ago, Lagos and Kebbi, where you visit the Lake Rice. That's the kind of partnership that we should be seeing. Produce, you have those that will consume it here. So as those business opportunity or those business agreement comes up, that would even drive infrastructure. That if Lagos State sees that a lot of its goods or demand is coming from Kebbi, there's nothing stopping Lagos State and Kebbi from signing a PPP arrangement for a rail project from Kebbi to Lagos State. So those are some avenues where we can also improve. See, when you look at even across the Lagos, Ogun, or your state, there should be a major synergy across those states that would help open up the economy of the state. So this report just further buttresses that major issue that we're having, and we're hoping that maybe something will be done one day on this.
Interesting. Agnes, what's your take on this when you look at how government needs to, not just at the federal level, but at the counties, at the municipal levels, and try to help? Because when we talk about government of the people, by the people, for the people, the focus is actually at the bottom of the pyramid, where most impact will be made in the people's lives, whether it's about funding women business, SMEs, and all of that, using agriculture or horticulture like you have in Kenya, for example, and in a number of other East African countries like tea, coffee, in Uganda, Tanzania, and Rwanda.
Absolutely. When you devolve governance, it means then leaders in those federal states need to be innovative and find ways of representing their people, and that's also economically. I think it's a good, I haven't gone into detail, but certainly some things we in Kenya, after devolving our government in 2013, that's something we're trying to have synergy between the national government and the county government to see who has the responsibility of driving investment into county government, because we have over-relied on the national government, and obviously it means that counties and states are not able to make decisions because they're very much dependent on the big man in State House. So certainly a good move, and one that needs to be encouraged. Like ownership and governance to where the people are and see how we can support them. And I think it's a good move to see conversation around development and finding solutions for investment.
Interesting. We'll talk more about a few stories within the Nigeria space. A very big week around the marketplace with the monetary policy decisions on Tuesday. But first, look at the Southern African markets for Thursday in terms of the story. Zambia is in the news. We're expecting a budget a speech today by the country's Minister of Finance from Lusaka. Meantime, yesterday, the country's inflation was reported at 15.7% year on year because food and non-food prices remain stubborn. And then we got Moody's reporting a 9-page on Africa's banks and says the bank's credit worthiness is dependent on is beginning to lean on the pressures that the sovereigns have. In other words, there is a link now between the pressures that sovereign or governments in Africa face and the banking sector. The report went on to talk about the size of government securities that are held by banks, says they're beginning to look unsustainable compared to their equity base. For Nigeria, that's said to be about 21%. For Egypt, 35%. For South Africa, about 15%. One good news from Zimbabwe, launching an online trading platform called ZSE Direct. That's one innovative way of trying to get the investors to participate. Local retail investors, by the way, that's the target of the new Z Direct online trading platform, which was launched yesterday. And sticking with Zimbabwe, Afrexim Bank is backing Russia's $500 million platinum mining project in that southern African country. It's going to be the largest mine ever in Zimbabwe. So when we talk about the banking sector report from Moody's, Ayodeji, what's your take on this, about this subtle warning about the fact that banks' credit worthiness is beginning to look like they are sovereigns? In other words, if your country's sovereign rating is weak, then it impacts on the banks themselves.
Yes, this follows the principle that the banks are operating within that subset. So what Moody is saying is that it's really tough for you to have a rating that is beyond the economy. You know, if you beyond even the banking space, if you look at likes of Dangote Cement, when you look at the rate at which they for their commercial paper, you see it's always less than like 1% premium that they charge over treasury bills, and that premium would continue to be there, because if there's a major challenge or major problem across the economy, there's no way the banks can be shielded from it. So for instance, in 2016, when we had the recession, when the economy was down, non-performing loan increased significantly. So it's the banks which are like the gateway to the economy. They are more into financial intermediation. They will always be impacted if there's any major shock in the economy. So you can't earn a rating that is beyond that economy. Even for even the economy that we always adjudge risk-free, it's the only we've seen other economies that have even defaulted even on their debts, and they have restructured. So it's that risk-free element still has its own element of risk, and it has its implication whether they are restructuring, whether they are printing money to bail out themselves. So for me, I quite agree with of the view that the rating, no matter how strong those banks seems to be in any economy, they still have some form of there's a bit of control. They don't have that full control. Some of, like, if you look at for the corporates, Eurobonds, those are the banks that still have Eurobond, for instance. or even if they have corporate bonds, if they cannot pay those bonds, pay back, they will need to, they can print money for the Naira one, and they don't also have control. If they don't have access to dollar liquidity, they may not also be able to redeem, or they may not also be able to pay off their investors. So there's some form of risk element that would be factored into that. So they will always come at a discount in terms of rating to the sovereign.
Onyeka, let's talk a little bit about the trading day for this week. Well, give us a sense of the equities market since the Tuesday's announcement. What's your outlook on today? We've seen two strong sessions, 0.3% on the day after, then the second day 0.79%. So is this a trajectory that, and who's playing this market, by the way? Who are the strong buyers?
Yeah, I mean, for the past 2 days, we've seen some really good gains in the market, and this came, on the heels of the MPC decision, where they, cut the benchmark rates by 100 basis points, and we know that the intention of the CBN was just mostly growth signaling, as the expectation is that this will not really have much of an impact on the pass through to actual interest rates is going to be very, very sticky, and we've seen the market react to this positively because of two reasons. One, the pro-growth signaling is positive for corporate performance, and then the second is that interest rates, the signal for interest rates is actually on the downside, and we're already we're in a market where interest rates are, on treasury bills and government securities are already extremely weak for investors. We've been on roadshows this past week, and every investor is worried about the domestic interest rates, and is looking to either move their assets internationally, or look for ways to take advantage of dollar of dollar denominated capital market securities, and we expect that that would either continue today, if because towards the end of trading yesterday, we saw that there was still some buy sentiment. Investors were still interested in buying, mostly from domestic investors, actually, because foreign investors are still sitting on the sidelines. The NSE released the FBI report for August, and we saw that foreign portfolio inflows have not improved significantly. And we see that even in this very minor rally, it's still the domestic investors that are driving it.
Okay, let's take a quick one at the North African market. The biggest story there for me is Libya returning to oil production that could go as high as 300,000 barrels per day over the next few weeks. Yesterday, the National Oil Corporation announced that 3 of the country's 7 oil export terminals have been reopened for immediate exports. That's good. But Egypt is the headquarters of Afreximbank, where Fitch Ratings affirmed the Trade Finance Bank triple B minus long-term IDR, and keeps the bank's outlook stable. IDG, do you think oil is Libya oil comeback is good for the market, despite the price at the current level?
Yeah, I think it's not positive, because it means, if I get you clearly, the supply would increase, and that would impact on prices. And for Nigeria, all our hope, they are on revenue from oil. The diversification is still on paper. So, and based on what is happening even in the economy, even the VAT that they would get, taxes would also has also been impacted significantly. So I think it's mixed for us now, that even for when you look at it, that the downstream space has somehow been deregulated. So the higher the higher oil prices moves, and the higher we pay for petrol, which will has very direct impact on transportation cost and the price of goods and services. So now it's the 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 implication, yeah, it's different from what it used to be some months back, and we'll just have to see how we pray for that it gets to a balance, and government is able to diversify quickly, such that the rate at which they are investing in the economy, opening up the economy, is faster than the impact, who is able to cushion the impact of higher food prices on the Nigerians rather.
Okay, a final word. Thank you, Ayodeji, from Agnes. When you look at Zambia's Eurobond stepping into a default process, we talk about the risk premium that we have to pay in Africa for our Eurobond and our debt. What are your thoughts here as someone in the investment market?
Thank you, Boston. But before I come to Zambia, may I please comment on Libya consumption of, or continuing to
Oil production.
Oil production, yes. I think it's interesting. I think he has to, and I completely agree with Ayodeji that why Africans still drilling while everybody else is looking for renewable energy. But for Libya, I think it's a sign of peace and stability. Of course, we know there have been two factions, and hence oil production stopped because of the animosity between the two factions. I think just this move is a positive one, and perhaps a sign to peace and stability for this North African country. So yes, drilling at this time, I think when the prices are very low, is not great, but in terms of just the conversation, peace and stability, it goes a long way. Zambia, one of my biggest concern, Boston, is why we are able to tap in the international capital market without really, why are international investors lending our government's money without really looking at the risk. I think for some of the Euro bonds, Kenya, for example, the international money markets needed to look deeper as to what the risks of investing in this market were. And for Zambia, they failed. And I think Zambia should default. They had no way of paying back. Obviously, the challenges induced by COVID obviously puts a lot of stress. I know we talk about risk premium for Africa projects, but there has been such an influx in the last, we talked about Africa debt levels rising at such an alarming rate, but private debt was one of the biggest concerns, and international investors continue to pour money into the African governments without really considering how they're going to be repaid, and the burden goes back to the citizens. So Zambia's default, I think, sends a really a warning to international investors that invest your money where you can be able to get your returns back. Yes, certainly.
I understand it's not quite a very pleasant story when we get ourselves into this a bit of a quagmire when it comes to Africa's debt, whether on the government side or on the side of private sectors, whether into banking or other industries. We just need to get our acts together one way or the other. And I think the fiscal authorities should lead that directly from the front. Thank you so much, Agnes from GBS Africa. It's good to have you on the program today. Enjoy your weekend. Ayodeji Ebo, investment professional, thank you so much for coming through on the show. And Onyeka Ejioman from Vetiva Capital, thank you, three of you. Enjoy your weekend and see you next week. Bye for now.